Hello everyone, welcome to Elliott Wave Forecast.com YouTube channel. This is Henry, and today is Thursday, March the 12th, and the time is 4 a.m. GMT. Okay, a lot of things happened the past 24 hours. So obviously, the biggest news has been the virus that is now basically wreaking havoc in the West, and yeah, it's a very fast moving market right now in all asset groups. Indices also very fast moving. So just to give you an update, quick update here, and not necessarily, good news from the perspective of just day-to-day life, but anyway, from the S&P side here, the 15 minutes chart, we could see we have a bearish sequence right side down, and looking for the downside here. Okay, and as far as staying below 2884. Okay, if we step out and zoom out a little bit, looking at the larger degree, we can see we got a W and X here, so we are in the Y. Okay, and again, this I put down the WX on the daily chart here, and so that means we are now within the cycle. Since we top out on February 19, it took less than a month here to basically decline almost like 20%, right? Now anyway, in the futures, S&P futures, yes, this is cash based, by the way, so it only opens when the market opens, and is closed when the market closes. It's not 24 hours like the futures. Now the futures has started to extend lower again. I understand that, and so in a way this is probably not as relevant because it's already going down in the future. Then of course when the market opens tomorrow in the US, then of course this is most likely gonna go down, right? I mean, that's kind of given. However, at least if there is anything we can take away from here, is the idea that if you take a look at the daily, the target on the downside here, this is a big range between 25.95, 22.61. All right, if you just measure this distance between the range, the possible range here, that is I think it's around 10%, right? 10% range. Let me double check here. 25.95. Yeah, this is actually 13% range. So again, from here we expect possibility that the sell-off may slow down a bit and may start to reverse. But remember, this is a 13% range here. So in terms of from the pure risk management perspective, anybody who wants to buy this, for example, with a 13% range, for example, it is tough because we need to always manage the risk for trading anything, right? To 1 to 2% at most, and thus position sizing and everything is the key in trading, as always, as we always told our members that way. And what we can take away from here is that we are approaching the extreme area from February 19. So therefore, at this point, we do need to be careful chasing the short side, because like I said, even though if the market is still here, then I think we still can look to sell it perhaps or something like that. But since we are approaching that box, now we need to be a bit careful. Now, not saying that it has to bounce from here or we need to buy, not saying that, but there is a possibility that we can start to bounce from here, larger degree bounce to correct this cycle, at least in a bigger response like this. Right, it is possible. Now exact level always is not going to be able to be determined, right? Not exact level, but it's always a range. This is the range, the extension here from the WXY. Now, does it have to bounce from here, or does it have to bounce very big? No, not necessarily, right? Now, in fact, if this is going to be extending lower aggressively, then that means that this can extend as low as this 2261, which is going to become 1 2 3 4 5, becoming an impulse structure from the February 19. Okay, so as So the only way that this can continue to go lower if this is becoming some sort of an impulse. So it's going to be a very massive pullback if that's the case, right? So we'll see. It seems to be a little bit um, too extreme to think that this is going to become a five ways down, but you never know, right? Anything can happen in the market, and again, I think for those that think that okay, how can we even bounce if the data is going to be very bad now that the US has started to panic and they have stopped everything right now, like the games, all the games, entertainment stop, conference stops, even travel from the European nations stop, right? And a lot of people now getting tested positive recently. So you might think that way, but you never know. Maybe the central banks do something really extreme to make sure the market is not tanking, and then the market responds and then starts to reverse and so on. So we are approaching that blue box. So at this point, uh, it's if anybody tries to sell it, we need to understand that we are approaching inflection area, so we could potentially slow down or even reverse, at least bouncing, in three waves of some sort from this blue box area. Otherwise, I think shorter cycle you can expect for the downside. We have not totally reached the 2600 yet at this point, even the futures. So even in the shorter cycle, you can expect more selling pressure, right? More selling pressure to 2600 or even lower than that, because the range here is very big. So at least in the shorter cycle, we can expect a little bit more downside. But then if we hit this area, high 2500, then we need to be a bit careful, because we could potentially see a reversal from there, or at least some sort of a consolidation or slowing down of the decline. Okay, so we'll see what happens in the next few days. Very, very volatile market here, and I'll see you all again tomorrow. Have a nice day, everyone.